So when it comes to real estate, investing in real estate, what are some tax benefits there? Like that you can say,
Oh,
work,
well, a lot.
give me
So,
two. Oh,
so the fundamental advantage of real estate when it comes to taxes is depreciation. Whether you're buying a residential property or commercial property or a multifamily or whatever, you buy a, or I should say, leverage and depreciation. So you buy a property and you'll have a certain amount of income associated with it that you're renting out or doing whatever you're doing with the property. You'll have cash expenses with that. You'll have your insurance, you'll have your mortgage, you'll have your property taxes, utilities, all the things that go along with owning the property. And also, when it comes to the mortgage, some people, especially smaller investors, don't really understand this, is that the mortgage payment that you're making is not all deductible. Only the interest is deductible. But what happens is that the building that you bought, the real estate that you bought, gets depreciated over time. And how much time depends on what kind of property it is. But generally, you're going to be writing off 3 to 4% of the building cost each year. So your cash basis profit and loss might show a profit of, I'm just picking a number, $5,000, but you have a depreciation loss of $8,000, and that means you have a tax loss of 3,000. Okay, again, just picking numbers. So that depreciation is amazing because you didn't actually pay out of pocket the full amount. If you had to pay cash for the property, then it wouldn't be that attractive because the depreciation that you get would not overcome the fact that you had to lay out $300,000 or whatever the number is. But because the banks will lend you money, at least, and the vast majority of the money to buy the property, then you get to get the depreciation on the full amount while only laying out the cash for a small amount. And so because of that dynamic, almost all rental real estate of whatever kind runs at a loss on a tax basis. So that's the first level of tax incentive for real estate. So whether you're able to use that deduction, that loss or not, depends on other factors. Depends on what else is going on in your tax world. But if you are able to use that, then there's a second layer of depreciation strategy, and that's called cost segregation. So when you buy, let's just pick a house. You buy a house. It's the house is not one thing. The house is a lot. There's a piece of land associated with it. There's probably a driveway. There's sidewalks. There's landscaping. There is a building there. There's that. Inside the building, there's cabinetry. There's wiring. There's ceiling fans. There's tile. There's flooring. There's all these different things are all packaged into this thing we call a house. And so what cost segregation does is it goes into all of those different pieces and it segregates, it separates those all those assets into their own categories because they all have different levels of or different rates of depreciation. So like a residential house, 27 and a half years. A ceiling fan, 5 years. And with bonus, mostly in year one. By segregating out the different pieces into different streams of property classes, then we're able to accelerate the write-offs from being spread out over 27 and a half years into years 1, 2, 3, 4, 5, primarily, and mostly in year one. So if your tax situation allows for it, then you can get huge depreciation in that first year. And if you do it really right, then you can actually get enough depreciation in the current year in order to generate yourself a tax refund so that you can then take that money, put it down on another property for the following year. And then you're just able to roll that same strategy because every property can be cost segregated. So you can just acquire an endless stream of properties for the one-time cost of buying the first property, which is an amazing strategy. And there's a lot of hoops to jump through to make that work. But if you can, it's super powerful. So that would be like layer two of real estate. But yeah, so you asked for two, that's two. I don't want to go on. I don't want to go off for another hour on just real estate because I know we got other stuff.
understood, no worries.